So without further ado, today I would like to introduce to you our very special guest from Nomura Asset Management. He's a senior economist there. Now I would like to hand over the time to Mr. Atsushi Matsumoto.
Thank you. Thank you for kind introductions. And hello, everyone. My name is Atsushi Matsumoto at Nomura Asset Management. And today, I'd like to briefly share our view for Japan's macro with you. But before I begin, I need to say, today, I'd like to take a moment to clarify that the information presented today is intended for informational purposes only. While we'll be discussing a lot of insights and data, please remember that this presentation should not be considered as financial advices, so only for informational purposes. So with that in mind, let's move on to the key topics. So the first topic is Japan macro outlook. So please, this page summarizes our Japan macro outlook for 2025. And we are having a constructive view on expecting around 1% of GDP growth this year. And you might say that 1% is very weak number, but we need to note that the trend growth of this country has been estimated to be around 0.5% or below. So for that country, 1% is very big number, so strong number. And concerning inflation, although we expect some disinflation trends to continue towards the end of 2025, we can foresee inflation rate around 2% at the end of this year. So we are looking at solid GDP growth of 1% alongside 2% inflation. So this combination is what the BOJ has been aspired to achieve for a long time. So that's why the BOJ has already decided to initiate its normalization cycle and deciding 3 rate hikes already, March last year and July, and also this January. So moving forward, we are anticipating an additional rate hike by the bank, and the timing will be next July this year. So going to next page. Let me discuss our currency outlook. So in recent weeks, we have seen some appreciations of the Japanese yen, especially against the US dollar, and the current level is around 149 level. But we believe that this trend will not continue going forward. So I mean, we do not expect the recent appreciation of the JPY will be sustainable. So when we talk about the appreciations of the JPY, we think the most important factor is the interest rate differential between Japan and the United States. Of course, there are many other factors affecting the trend, affecting the dynamics of the JPY, but those factors are likely to cause structurally depreciation pressures for the JPY. So therefore, the interest rate differential will be the principal important determinant affecting appreciation pressures. And for the United States, we are not expecting the Federal Reserve's rate cuts this year, so no rates cuts for 2025. So that's our expectation. So in this context, it is difficult to anticipate a significant decline in the interest rate differential between the two countries, as shown in the left chart. So based on this forecast, we believe the JPY will move only sideways through the end of this year, as shown in the right chart. Now, let us turn to the outlook for Japan's macro. So this page summarizes one of the two critical factors for Japanese economic growth 2025, which is the impact of the Trump administration policy. So this page shows our estimations of the effect of Trump's policy on US GDP growth, focusing on 3 policy areas, which are immigration policy, trade policy, and fiscal policy. And both immigration and trade policy are expected to have a downward pressure on the US GDP growth. But particularly after 2026, we can anticipate a significant positive effect from Trump's expansionary fiscal policy, as highlighted by red square. So thus, on net, Trump's policy are likely to serve as a positive factor for the United States, but non-US countries such as Japan are not likely to feel positive impact from his fiscal expansions. So those countries will predominantly encounter negative factors, especially from Trump's trade policy, additional tariffs, I mean. So as you can see, this point will be a negative factor to the Japanese economic outlook for 2025. However, we are expecting around 1% GDP growth this year, and that's why that is because we are anticipating a tailwind from Japanese domestic conditions, which is wage and income dynamics in Japan, which is in page or next, which is shown in next page. So the left chart here illustrate negotiated wage covered by shunto. Shun means spring in Japanese, and to means battle or fight in Japanese. So shunto means spring wage battle, spring wage negotiations. So typically, a lot of Japanese companies have had wage negotiation in spring. So that's why it is called shunto, spring wage offensive. And if you look at the sorry. If you look at the left chart, which is the wage growth agreed at the Shunto, we are expecting around 5% for 2025 around. And actually, last week, a primary result for the 2024-2025 round was released. And it was 5.46%, slightly exceeding our expectations. So it was a very good number. So based on this wage agreement, we can expect further improvement in wages. So if you look at the right chart, real wages are shown by the red line and private consumption by the gray line. And you will see that while nominal wages accelerated significantly in 2023 and 2024, real wage growth, highlighted by red line, remained negative in those 2 years due to high inflation. So that's why that was the primary reasons behind consumption stagnation in 2023 and 2024. However, for 2025, the situation will be different from those 2 years. So as indicated by the red line, we forecast a continuous improvement in real wages throughout 2025. And alongside this, we anticipate a positive recovery, positive expansion in household consumption, which will serve as the main driver for 1% GDP growth in 2025. Now, please move on to the next page. So this is the final slide of my macroeconomic overview. I would like to discuss a significant change in inflation dynamics in Japan. So, I mean, the inflation regime in Japan has undergone a drastic change during and after the pandemic and the Ukraine war. So this regime change occurred in 2 stages. So the first stage was the energy shocks and other commodity price shocks led to a surge in goods prices. So this kind of story is not surprising in non-Japan countries, in other countries, but that is very surprising in Japan actually, because if we look at the past, even if energy shocks or commodity shocks had happened, Japanese companies were less willing to pass on those cost increases to selling prices. They tried to absorb those cost increases because they thought that if they raised prices, their clients or customer would run away from their product. However, the cost shocks happening during and after the pandemic and compounded by the Ukraine war were so substantial, so big that Japanese companies at last gave up absorbing cost and instead started to pass those cost increases onto selling prices. So this shift in price setting behavior of Japanese companies is what has contributed to the acceleration of goods prices in goods price inflation in 2022 and 2023, which is a green line in the left chart. And the second stage for the regime change was that this goods-driven inflation translated into wage increases and services inflation. So as a result of a high inflation due to goods prices, Japanese workers and Japanese labor union demanded higher wages. And as I have shown in the previous page, Japanese wage growth started to accelerate in 2023. So importantly, Japanese companies passed wage increases to service prices. So this is represented by a moderate but steady acceleration in services inflations shown by the red line in the left chart. So overall, through those two stages, both goods prices and service prices entered a phase of acceleration, signifying a considerable change in Japan's inflation dynamics. So before the pandemic, price stagnation or low inflation or zero inflation was recognized as a critical negative factors for Japanese domestic businesses, as shown in the right chart here. So meaning that the ending of price stagnations, ending of zero inflation will be crucial for Japanese domestic companies. So of course, we have some downside risks to our economic outlook, suggesting that the GDP growth might be weaker than our current expectation. But even if the GDP growth rate underperforms, the shift in inflation dynamics is likely to be irreversible. So which would good for both good for Japanese macroeconomic outlook and Japanese equity market as well. So now let me move on to the Japan equity market trends and quickly discuss the movement of Japanese semiconductor sector. This graph shows the historical performance of major indices from January 2020 to January 2025. So topics, MSCI Europe, S&P 500, and CSI 300. So topics is a market capitalization weighted index representing a broad equity market in Japan, and MSCI Europe measures a broad equity market in Europe, and S&P 500 is commonly known equity index in the United States, and CSI 300 gives you the overall market trends of China. And here, the S&P 500 outperformed the others in the last 5 years, followed by topics, MSCI Europe, and CSI 300. At some point in 2023 and 2024, however, you can see topics being outperforming the S&P 500. So please move on to the next page. Let me break down the reasons of attractiveness of Japanese equities. So here, the PER, a price-earning ratio, is calculated by dividing the stock's current price by its latest earnings per share. So it can help assess whether a stock is overvalued or undervalued relative to its historical range and peers. And this chart illustrates the historical and current PER per country. So what this shows here is the Japanese equities are currently undervalued compared to its historical range. So as you can see, Japan's PER is currently at 13.6. So and this is below its median, y square, and it's close to the lower bound of the historical interquartile range. So that is the range between 75 percentile and 25 percentile range. So in contrast, for example, US equities seem to be overvalued even compared to its historical range. Now, please move on to the next page. Japanese companies are accelerating share buybacks activities, which will help improve capital efficiency of companies. So please look at the graph on the left side. This shows investment activities by major investors. The investment activities by Japanese corporations started growing as the topics was rising, and this implies that Japanese companies are getting more proactive in investment activities ever. So increasing share buybacks by corporation can indicate confidence in financial health an intent to improve shareholders' returns or strategies for enhancing stock prices. Moving on to the right chart, it is obvious that in fiscal year 2024, more and more acquisition of treasury stocks were conducted. By reducing the number of outstanding shares, buybacks can lead to an increase in earning per share, even if total earnings remain constant. So this can make the company more attractive to investors and potentially leads to a higher stock prices. Next, let me break down the equity market by sector. So this page indicates the corporate earnings growth forecast in fiscal year 2024, categorized by GICS sector classification, which is Global Industry Classification Standard. And we compare them by three regions: red for Japan, gray for US, and green for Europe. And by industry, Japan showed the highest earning growth in 6 out of 11 industries. From left, energy, materials, consumer staples, healthcare, communication services, and real estate. And by the earning growth rate, material and information technology showed higher rates. So please move on to the next page. So for my last few slides, let me quickly go over the overview of Japanese semiconductor sector. I'm sure you have heard of the name of semiconductor companies a lot in the last few years, such as NVIDIA, Intel, and TSMC. So over the past 30 years, from 1990 to 2020, the world's semiconductor market has been steadily expanding due to technological advancements represented by computers and smartphones. However, while the semiconductor market was valued at 0.44 trillion US dollar in 2020, it is expected to grow to approximately $1 trillion by 2029, representing an increase of more than double over the 10 years from 2020. So as shown in the image on the left, semiconductors are used in a wide range of products around us, including home appliances, computers, smartphones, infrastructures, and vehicles. So given this, it is hard to imagine a future where semiconductors are not needed. So on the contrary, as technologies like artificial intelligence and autonomous driving, which are currently gathering attention, continue to develop, the estimate indicates that the demand for semiconductors will only increase further. So please move on to the next page. In the context of the global semiconductor market, Japan's situation is quite interesting. So as some of you may know, Japan was once the leader in this industry, holding the top market share back in the 1980s. However, by 2019, we saw a significant decline with Japan's semiconductor industry share falling to approximately 10%, but it's not all doom and gloom. So there are still vital areas where Japan demonstrate a remarkable strength. So for instance, in the field of major semiconductor materials, Japan holds a dominant share of 48% globally, and in semiconductor manufacturing equipment, it has captured a 31% share, ranking second only to the United States. And as the semiconductor market continues to expand, there is substantial potential for growing in those sectors where Japan already has a strong foothold. So the future looks positive for Japanese companies as long as they can navigate this evolving landscape. So finally, this is my last slide. So let us turn our focus to the substantial support provided by the Japanese government for the semiconductor industry. So perhaps please look at the blue bar on the left. which shows how much the Japanese government supports the semiconductor sector. So in fact, Japanese government is offering significant backing amounting to 3.9 trillion Japanese yen. This is equivalent to around 35 billion Singapore dollar. So this level of support ranks as the second largest in the world, surpassed only by the United States, particularly when compared to Europe or other markets. And on top of that, please look at the red dot above the blue bar. So this figure means the percentage of the government support out of GDP per country. So if we examine this support relative to Japan GDP, it stands at an impressive 0.71%, which is higher than that of both Europe and the United States. So this robust support is poised to strengthen the foundation of the semiconductor industry in Japan. So as I talked on the previous slide, Japan is really good at manufacturing semiconductor materials and equipment. So especially the demand for semiconductor manufacturing equipment is rising at a higher level than the total semiconductor market growth rate as the semiconductor supply chain gets more complicated. So in 2021, TSMC formed a joint venture with Sony and Denso known as Japan Advanced Semiconductor Manufacturing, JASM, to build a semiconductor fabrication plant in Kumamoto Prefecture in Japan. So our Prime Minister, Mr. Ishiba, positively evaluates this project for generating significant economic effect. Even more, the Prime Minister has announced a policy to additionally provide over 10 trillion Japanese yen, which is about 90 billion in Singapore dollar, in public support for the semiconductor and AI sectors by the fiscal year 2030. So as investment in new technology development is encouraged, we can look forward to anticipating long-term growth in this sector. So I stop here and thank you for listening. I pass on to Darren for the next part.
How do we take action? So this is the part. Okay, so please allow me to introduce to you to Japan equity ETFs. The first will be the Next Funds Nikkei 225 ETF and the Next Funds Nikkei Semiconductor ETF. So let's talk about the Nikkei 225 ETF first, the one on the left highlighted in red. Let me just point it out. Okay, this one over here. Okay, so let's talk about this first. You can find it under the ticker 1321.jp. Okay, as the name suggests, this is a benchmark index. The benchmark index is the Nikkei stock average, more commonly known to most of us as the Nikkei 225. Okay, it is actually one of the most representative Japan equity indices. Okay, providing a comprehensive view of the Japanese equity market performance overall. Okay, so its price-weighted equity index consists of 225, as the name suggests. Okay, large cap stocks listed on the on the Tokyo Stock Exchange. Sorry. Okay, it is also one of the oldest ETFs tracking the Nikkei 225, and the current AUM is about 94 billion Sing dollars. Okay, which is also the largest Nikkei 225 ETF by AUM. Okay, and AUM meaning the total market value of all the assets held within. Okay, so also not included here in case you're a dividend chaser. Okay, 12-month dividend yield is 1.57%, if I remember correctly. As of today, is 1.57%. Roughly 7% 1-year dividend growth and 19% 3-year dividend growth. Yes, I think that's right. Yes, correct. So how easy is it to get exposure into this market? Okay, 1 unit of this goes for about 38,000 to 40,000 yen. Okay, if you're not you don't travel to Japan much or you don't really look at the FX, that's about only 350 to 360 Sing dollars to get exposure into all these, okay, into this ETF and all these stocks. So, and I also want to point out something unique about this ETF. Okay, so currently the fee is sitting, excuse me, at an approximate 0.1065%. Okay, over here. But the fee level actually changes on a semi-annual basis, okay, based on the AUM, okay, which means for you, the investor, when the AUM grows, okay, the fee decreases, okay, which I'm sure everyone realizes this is a benefit for us as the investors. Okay, now moving on to our second one. the Nikkei Semiconductor ETF. Okay, so it really does fit the current investing theme and climate quite well. Okay, this next Nikkei Semiconductor ETF. Okay, under the ticker 200A.JP, actually, it really is denoted with the letter A. It's not like a typo or anything. Okay, I was a bit surprised when I found out also. Yeah, it's 200A.JP. Okay. So the benchmark index is the Nikkei Semiconductor Stock Index. Earlier on, we talked a little bit about semiconductors already as well. So you know of its growth potential. Okay, so this is a market value weighted index comprising of the 30 major semiconductor related stocks listed on the Tokyo Stock Exchange. So this index is considered relatively new, okay, around June 2020. Where's my mouse? Yeah, June 2024, okay, being introduced around in 2024. Okay, so this is of course to cater to the growing market trends in the semiconductor sector. So this ETF is also the first to track this index, and the current AUM is about 145 million Singapore dollars. And earlier on, we talked about entry barrier, $350 to $360. That's pretty low. Okay, so for this one, okay, the entry barrier is actually even lower. Okay, it's not even in the hundreds. Okay, if you are considering just the cost, okay, you can get it at a humble 2,000 Japanese yen, or roughly about Singapore $18. Okay, so get your exposure into this. Okay, so this is the ETF for you if you're considering a more thematic choice. Okay, like you don't want like, oh, I don't want like 225 companies. I want like semiconductor. I want this sector. Okay, so this more thematic choice in your exposure to the Japanese markets, or maybe you already have a broad exposure elsewhere and you want to like narrow it down to like just the semiconductor sector. This could be one of your considerations. Add a bit more color and innovation to your portfolio. Okay, so the ETF on itself, of course, is already very attractive, but some of the constituent stocks also, of course, they play a very, very big part. Okay, the indices, the composition of the indices. Okay, so we will have some introduction, of course, to the key stocks that are in them. So with that, I would like to hand over the time to my colleague Kenyon. He will take over from here and introduce you to the constituents as well as more on the index.
Let's break down some of the constituent stocks of the Nikkei 225 index and the weightage of each sector. Just for some clarity, if you look above the pie chart and wonder what GICS stands for, it is Global Industry Classification Standard. Okay, let's begin by speaking about the pie chart. We can see that the index is very heavily weighted in IT, which amounts to 25%, a quarter of the total, followed by consumer discretionary, which is about 22%, and then industrials, which is about 18%. Some of the leading companies in these sectors and by weightage in the index are shown on the table on the right. Let's say, for example, fast retailing 9983.jp is categorized under consumer discretionary, and we know them more commonly as the operators of Uniqlo, which is a brand I'm sure we are all very familiar with, as it is a very popular clothing brand here in Singapore. Though not limited to Singapore and Japan, Uniqlo is a global brand with more than 2,590 stores around the world, which also accounts for about 55% of the company's revenue, while the Japan segment accounts for about 30%. A lesser known brand here in Singapore is GU, which accounts for about 10% of their revenue and was established in 2006 in Japan as a sister brand of Uniqlo. As of now, they already have more than 450 stores in Japan. Another two counters to note here under communication services, which total up to about 11% of the index, are SoftBank and KDDI, which are major telecommunication companies in Japan. The SoftBank Group, which is well known recently for their stake in Arm Holdings, also has an investment holding company under their name, which includes stakes in AI, smart holdings, and many more future technology projects. They also have SoftBank Vision Funds and SoftBank Latin America Funds, which are investing more than 160 billion US dollars to assist entrepreneurs transform industries. Now we'll move on to the next index, You'll see some similarities in the constituents there, and we'll talk more about them in the next slide. Okay, so this index is called the Nikkei Semiconductor Stock Index. And what it does is that it gives investors exposure to the Japanese semiconductor sector. And it should come as no surprise, the weightage being put into IT, as you can see from the pie chart on the left. You will notice that there is some consumer discretionary and even healthcare sector companies here. This is because the index provider Nikkei picks up stocks that are related to the semiconductor business. However, companies engage in non-core businesses that have a revenue ratio of 10% or more from semiconductor-related operations and possess a high market share in semiconductor-related products will also be included in the selection criteria, while considering their market cap, of course. Now let's take a look at the top constituents. You may recognize some of them from the Nikkei 225 index as well, such as Tokyo Electron and Advantageous, and may also be quite familiar with the brand Sony. Tokyo Electron 8035.jp is a leading global company of innovative semiconductor production equipment. They engage in development, manufacturing, and sales in a wide range of semiconductor product fields. Their semiconductor production equipment product lines maintain high market shares in their respective global segments as well. Some of their more prominent customers are companies like Samsung Electronics, Intel Corp, TSMC, Taiwan Semiconductor, Micron Technology, and SK Hynix, which are all big players in the AI and semiconductor fields. In their Q4 2024 earnings, their revenue increased by 41.2% compared to the same period the previous year, and EPS surged by almost 56% year on year. I would also like to highlight that this is not just a one-time event. This actually marks the 6th consecutive quarters of income growth for them and demonstrates a serious upward trajectory with their current momentum. The company is displaying its stability and growth potential. Now moving on to Advantage Corp 6857.jp. They sell semiconductor and component test system products and mechatronics related products, such as device interfaces. They are also engaged in the research and development activities and provides maintenance and support services associated with these products, and a wide variety of semiconductors and test needs. Their main business segment of semiconductor and component systems account for 70% of their sales. Advantage's fourth quarter 2024 financial performance positions the company in the top 10% of information technology companies, highlighted by its strong performance in net change in cash and return on equity ratio relative to its peers. Strong performance in these two metrics has historically had a positive correlation with information technology stocks, outperforming industry competitors. The company has also recorded an increase in its income compared to the previous quarter for the 6th consecutive quarter already. Okay, on to the next slide. Okay, as we can see from this index performance comparison, the Nikkei Semiconductor Stock Index, which is shown in blue, consistently outperforms the Nikkei 225 index for the past 5 or so years. This could largely be due to the advancements in chip technology and huge demand from AI, high-performance computing, and data center applications. These leading companies are at the peak of developing their newest AI trends and tools, and their developed products are heavily used in the creation of the next generation products. With the increasing amount of investments and research and development of the industry, the semiconductor index performance is becoming increasingly attractive as an opportunity to get one foot into the industry. Okay, next slide. The semiconductor stock index as shown here in blue appears to be able to capture more significant upsides during bullish cycles, as opposed to the Nikkei 225 index in red, which maintains a relative stable performance over time. This would also denote that the semiconductor index is more volatile than the other, with higher risk levels. It is also more sensitive to technological breakthroughs and global demand for advanced chips and components. The Nikkei 225 index is on a steadier trajectory, which could indicate that their broad composition of industries is mitigating the volatility. The semiconductor index can be more cyclical in nature, responding greatly and thriving on advancements in AI, while the balanced nature of the Nikkei 225 could provide a dampening effect or cushion against such sudden market shifts. Growth opportunity exists in both, but the Nikkei 225 might be more appealing for stability, whilst the semiconductor could present more growth opportunities or larger opportunities. However, by balancing and blending exposure to both of them, your portfolio can potentially achieve the long-term gains of new AI technology and still benefit from the diversification and stability. To summarize quickly, the next fund, Nikkei 225 ETF, gives investors a broad exposure into the Japan equity market and provides a steadier growth in the long run. While the next fund, Nikkei Semiconductor ETF, offers a more thematic approach to investing and getting exposure into the Japan market, and is more suitable for investors who are optimistic on the recovery of Japan's semiconductor industry. Okay, that's all for me. Now I'll hand over the time back to Darren.
Okay, thank you, Kenyon. So now you know about everyone, you know about the two ETFs, how easy it is to get exposure. So I'm just going to pause here at this slide before I go into a little bit of a few promotions. Don't leave yet. We have a few questions for our expert, Mr. Atsushi, before we wrap up today's webinar. But I'm just going to leave it here for a while as a simple summary. If you're on PC, maybe snap a picture. If on your phone, take a screenshot, okay, of the quick summary. Okay, I'm just going to leave it there for another 2 seconds. Okay, so before we move on to the onto a quick fireside chat with our expert, Mr. Atsushi, I would like to have just introduce everyone, okay, if you're not already a bonus client, or if you are, but you haven't started using, okay, to our Poems Mobile Tree communities. Okay, so on our new and improved, I say new, it's been out for a while, okay, but it is improved, okay, our Poems Mobile Tree app. If you would like to be involved with other like-minded investors, okay, have a platform for information sharing, stay updated with our staff actually post there, I post there, okay, so does Kenyon, okay, you get it directly from the source via dealers, okay, we all the latest new information, we just put it there for everyone, it's free, okay, then I highly recommend that you download our Poems Mobile Tree app and join our communities today. Explore the app a little bit, it's very intuitive, it's very new, and it's always being improved, okay. So additionally, I know for some of you who are joining us today, well, first, thank you for joining. Okay, you'll be happy to know also that you don't need to be a client to view the app and the communities. Okay, although of course I would highly recommend opening an account with us. Okay, so we can take care of you. Okay, so just a few snippets from our communities as well. Okay, so you can see over here, if you look on the left, okay, I'm just going to point it out. You look here on the left, these are all the different communities that we have. Okay, options trading, dividend investing, bond. Our bond specialists are on here as well. If you're hardcore into Singapore stocks investing, and we even have technical analysis as well, where one of our technical analyst researcher actually posts there quite consistently. He actually responds to your comments as well. Okay, so and then we have US options trading, and then this is the group that my team actually manages. Okay, we notify you of all the latest and greatest like Hong Kong IPO listings, pre-IPO trading. Okay, then we even have an ETF group dedicated technical analysis. So you see over here in the middle. Actually, this is all can be done by request as well. Okay, and a summary of the US earnings as well. So if all this sounds interesting to you, or it sounds maybe something you want to explore a little bit, no commitment yet. Okay, then you can scan the QR code right here. Okay, or maybe take a screenshot if you're on your mobile phone. Okay, it should take you directly to the App Store or Google Play if you're new to Poems. And if you already have the app, it will bring you directly to our communities tab. So something worth exploring. Okay. And on the topic of, hang on, I made this mistake before. I'm going to leave it here for 3 seconds because last time someone told me, oh, you flashed the QR code too quickly. Okay, so just take a screenshot, maybe scan it. Okay, so now we move on. If you are more into, Telegram, okay, good news. We also have many Telegram channels available for free. Can you tell that we have lots of information to give? Okay, so this QR code will bring you directly to our Global Markets Telegram channel. We got news, we got summaries, we got polls, we got events all over there. Okay, and of course, educational webinars will be posted. The how to join, how to find us will also be there as well. Okay, so if you would like to find out more of the other communities, you can join this one. Drop a comment, say, hey, link me to like technical analysis, and I'll link you right up. Okay, so you scan this, it will open your Telegram app and it will bring you straight to our community over there. Okay, so just going to give a moment. Okay, last part. Don't leave yet. Don't leave yet. Last part. Okay. Okay. Just for our existing clients, of course, we always want to take care of you and have something special for you. Do note that we have complimentary Hong Kong market data ready for you for mobile device. It's quick and easy to subscribe. Okay, you can scan the QR code here to take you to your app to subscribe. Okay, or if you're on desktop player, you can go to your desktop version. At the top of your screen, there's market data and rewards. Okay, you click there, you go to Hong Kong Live Price Mobile. It's free. Okay, for viewing on your mobile app. Okay, also, stick around. Okay, we will be having live prices for Japan market in the near future as well. So it's very convenient. Stay tuned for that. Okay, see, we're talking about Japan market now as well. How convenient, huh? Okay, so I have done enough of the promotions. Okay, for those who are interested in our market data, remember it's at the top of your Poems tab, market data and rewards. For those on the app, you can scan here. Okay, so Mr. Atsushi, I would like to present a few questions to you that we have prepared. Okay, so for us to better understand things. Okay, it's just a few questions. Okay, the first one is Japan is known for experiencing, I believe, macro deflation for about 30 years. Okay, which they call very dramatically the three lost decades. So you mentioned some remarkable changes quite early on in the presentation that's happening in Japan. So may I know what are the key drivers for Japan to strengthen its presence in the global economies?
Okay, thank you. So, as I said, the inflation regime in Japan has drastically changed, and the three lost decades, which is the combination of low economic growth and low inflation after the bubble burst in early 1990s, has finally finished. So now we are looking for a new regime. I mean, a new economic equilibrium for this country, which I think will be either low economic growth with 2% inflation or 1% economic growth with 2% inflation. So in either case, 2% inflation will be irreversible. So now we are still aware that a new regime will be the former, I mean, low economic growth with 2% inflation, but it will be much better than the past equilibrium before the pandemic of low economic growth and low inflation. And if the latter case happens, so it's up to Japanese companies, I mean, whether the Japanese company will be more optimistic about increasing domestic spending like capex or wages. So up to now, Japanese companies have earned profit a lot overseas, and those profits have been accumulated and reinvested overseas. So if those profits are repatriated to Japan, then it will be a very, strong tailwind for Japanese domestic economy going forward. So that's what I think.
Thank you. I think that basically covers everything about the key drivers already. Thank you for that. So I have just a few more questions.
Mm.
Okay. Next one would be how earlier on we spoke a bit about the Japanese yen against the US dollar as well. So while we're on this topic, how will the Japanese yen appreciation affect Japanese businesses?
Mm. Okay, thank you. So it depends on sector or industry. So for example, for Japanese manufacturing companies like Toyota, the Japanese yen's appreciations tend to dampen profits their profits denominated at the Japanese yen. So there would be some non-negligible negative effect arising from the Japanese yen's appreciations. However, the impact on the overall Japanese economy will be limited, as the Japanese yen's depreciation in 2022 and 2023 had not led to a significant positive impact on the Japanese economy. And in addition, while we are seeing, we are seeing appreciations recently, our assessment is that there are some structural factors which will continuously be depreciation pressure. So all in all, we cannot expect 120 or 130 level for the Japanese yen.
Okay, that's great. Okay, so I do think it's just on a separate question. Okay, I do think it's a positive sign that Japanese companies are accelerating their share buyback activities. Okay, but if companies start to prioritize buybacks over investments in growth or innovation or maybe capital projects, okay, this may lead to a decline in long-term economic productivity and maybe competitiveness as well. Or we could say that companies might be short-term focused over long-term strategic planning, which might potentially harm future growth. What do you think about this scenario?
Thank you. So that is what had happened in the last 10 years of the three lost decades. So that is in 2010s, before the pandemic. At that time, while Japanese economy stagnated, Japanese equity price rose. And we saw a weird coexistence of economic stagnation and equity price rising. And this is because Japanese companies prioritize to increase shareholders' returns, like increasing share buybacks or dividends, rather than increasing spending in business, capex, or wages. So this coexistence of economic stagnation and rising equity prices have, I think, the two implications. So the first one is that even if Japanese economy going forward is weaker than we are currently expecting, we are still able to expect equity price rising as in the 2010s. And the second implication is that if we have a sustainable, robust economic growth of Japan, a prerequisite for that will be that Japanese companies will need to prioritize domestic spending and capex or wage increases. So instead of increasing shareholders' returns, that latter case seems to be against to shareholders and equity prices. In fact, however, if Japanese economy gets better and gets stronger due to capex increases and wage increases, then it will be a very strong tailwind, great tailwind to equity market as well.
Okay, thank you. It's comforting to know, of course. Yeah, so just a last question before we wrap up everything. Recently, in the global markets, there have been a lot of turmoil. Okay, so we would like to know, what is your view on China, and how relatable is the Japanese economy and everything we've spoken of so far? How relatable is that to China?
Okay, thank you. So firstly, we are having a cautious view on China. The weakness in the real estate market will continue, and household consumption will stagnate, reflecting increased concerns about social security system. And certainly, population declining will be another, top issue for Chinese economy. So simply said, it seems that China faces the problem which Japan experienced in the past. And now, what I'm often asked by international client is the difference between the current China and the past Japan. And for that, the pace of declining in real estate prices in China seems less drastic compared to the past Japan. But the pace of population declining is faster, much faster in China than the past Japan. And in addition, it would be very difficult for China to rely on export as a source of economic growth. So as you might know, in the past, Japan relied on export, especially exports to the United States, but this would be difficult for China, taking increased tensions between China and the US into account. So based on those arguments, while we do not expect an economic stall in China, but we anticipate a gradual but steady deceleration in the economic momentum of China going forward.